Hi, good morning. Hope you had a great Memorial Day and short week, obviously, this week with not that much on the earnings front. But in our Sunday note yesterday, we put out, 2 days ago, we put out a mea culpa on our trade last week, which was long Exxon, short Nvidia. Although we did note that Exxon was up for the week, which was encouraging, which is to say these oils continue to work even in bounce NASDAQ tapes. Nvidia actually underperformed for the start of the week without getting too ridiculous here. But Nvidia was down after its earnings on Wednesday night in the aftermarket. But then Thursday, Friday, we had a huge NASDAQ bounce. And the reason we put these specific trades on is really to keep ourselves honest and more interesting and see how we get on. Now, the overall trade is down 7%, with Nvidia up 11 and Exxon up 4% for the week. But what we're going to do is keep that trade on. We would normally get stop loss at 10%, but we're actually going to keep going, and we'll see, because now this morning, once again, we're reminded that we're in an outrageous tape for oils. 120 Brent, 115 WTI, $9 US natural gas, and $50 refining margins is just unlike anything previously seen. And we're obviously running into a market where you have extreme valuation, coming off extreme valuations in tech and other, so-called non-profitable stocks. To that extent, I'll just run through some of the slides for this week. That's just the earnings. The one name that we focused on was Chargepoint, and this is their own outrageously optimistic-looking forecast of EV sales, which obviously is key to them. Now, I think charging is going to be a horrible business. And this is an alternate view, which actually is somewhat supported. But what's concerning about these two charts is these guys' outrageous forecast is kind of similar to these guys, but their history doesn't match, which, is like, great. How did you forecast if your history is not good? What is important is this electric vehicle registration chart for Q1, which is just underlining the incredible dominance of Tesla. I mean, it's over 70% of sales. They just have no idea what these automakers have disgraced themselves over the past 10 years. They really have. GM sold 80 EVs in the quarter. And, you would think from their adverts that they were one of the biggest players. They sold 80. And that's not all. I mean, Volkswagen. Ford has like a 4% market share or something, and that's double Volkswagen's. It's incredible. And of course, the point we're making is that EV prices are going up, right? Russia's not just about oil and gas. You've got a whole load of stuff like nickel, particularly in there. One interesting thing that we highlighted was the economist saying that a big part, and this is obviously further to the long oil short tech trade that we've been hammering on really since August of 20, is the economist showed an academic study which had argued that around $100 billion went into the stock market from retail investors, stimulus checks. And there's actually an academic study about that. So obviously, if you've got that retail coming out of the market now, which you may well do over the next, say, year, it's going to be an important marginal weakness for the market. Now, there's another indicator, which is kind of outrageously titled the Smart Money Flow Index, the Smart Money Flow Index, which is actually just the price of the Dow, which is dumb enough to take the price of the Dow in the first place. But anyway, it's the price of the Dow at 10 a.m. as opposed to 9:30 a.m. So it cuts out the first half an hour of trading, which is seen to be when the idiots trade. Yeah, right. And takes the price change from the previous close, 10 a.m. minus the previous close to the next close. And so the theory is that's when the smart money trades, and the smart money's been weak, but the market's been on a huge bull run. So either the smart money's incredibly dumb, or retail investors are smart, which is I've always thought is the case. But you can see here that retail is beginning to come off. And then when we look at things like the cost of a mortgage and the number of houses that are on discounted sale, price reductions in housing market, stuff like that is very concerning for the fact that heat will come out of the market. This is just a formal mea culpa on the Nvidia versus Exxon trade. As you can see, I was even by Wednesday and way out of the money by Friday, but it's not been bad enough trade for me to stop loss it, which would be around 10%. So I've got 3% left to play with, and I'm going to stick with Exxon long, Nvidia short. We'll see. Probably works pretty well today, I would think, based on Brent being 120 and the EU banning oil imports. This is just Nvidia versus Exxon's market cap, which is one of the reasons why I like the pair so much. So just to note here, this is Russian oil exports by destination. And you can see here, if you look carefully, this is from Middle East Economic Survey, which is highly credible. what's basically happened is India and China have massively boosted their imports, and sneaky Italy has had a massive increase in imports with some of the more, let's say, noble, I don't even know how, I don't want to insult Italians, but basically Netherlands and Germany and others have greatly reduced their imports, Finland, but Italy has massively increased its imports. And the overall point is that Russian oil exports remain very high. And this was confirmed to me by a major Middle Eastern producer. And then finally, we were highlighting tourmaline again, and we'll write more about that this week. This is actually North California gas prices, which tourmaline is exposed to. And we thought that the Mr. Rose, the CEO, was very, very impressive on our call on strategy session. So the main thing for us on a short week this week is going to be Chargepoint. We're sticking with the long oil, short tech, and we will be for a while. And I hope you have a great week. Cheers.